Hello, everybody. This is Decentralized Dave and Curtis back with yet another podcast. Hi, Curtis.
Hi, David. How's it going?
Well, pretty good myself, and we haven't done this for quite some time. I think like 6 months, and I've realized that it's actually against my interests to overanalyze stuff. If you watch the podcasts from 1 year ago, you're gonna discover that we've made some calls that are now coming true. So there is quite a
Sure.
lag, and that's how it is with the calls. You make the call and you just give it a time. You don't try to overcomplicate it, overanalyze it, and change it back and forth 3 times. It's actually the worst thing you can do. So I have honestly realized that perhaps it's even better if we do a podcast like this every once in a long while. Although Curtis has been working on his own channel, so that's gonna be included in a description, of course.
I'm on Twitter every day. I share a few things, and then I'm doing some videos. But yeah, I agree. If you're doing them every week or every day, you're not really making much of an impact because things don't change that fast.
It would be actually different if we have a good guest here, then we're gonna do the podcast again. For instance, I invited Mark Demesel. If he would come, then I would do the podcast again, even in October again. Curtis, let's follow our own pattern. So let's start with a Bitcoin analysis.
Okay, maybe you can zoom out a bit.
I'm gonna go to weekly, and I'm gonna turn these lines off because these lines can be disturbing for you.
Yeah, so we're at around 27,000. We're definitely deep into the bear market. From the peak, you can see it's been, 20 months or something like that since the peak of October, November of 2020.
It's 686 days, yes.
So well in, and it's pretty boring. Where I think we're at. So the big news would be the spot Bitcoin ETFs that might come in the next 3 months or the next 6 months. They've been pushed to January. Seems to be the big headline for the bull side. For the bear side, we've got the FTX trial of Sam Bankman-Fried. I think that's in October or November. And then Binance is still under some decisions and suits. So until those clear away, that's kind of an overhang to the negative.
Okay.
Bottom side, I think 20K is probably a fairly solid support level. We could go down. The biggest risk I see is the US stocks. I'm quite bullish on US stocks, but in the chance that they turned over in a major sudden recession, that would bring us lower in Bitcoin and crypto, of course. Not seeing that. If that doesn't happen, which I don't think it's going to, I think we're going to have fairly strong US economy, at least for another 6 months before a recession would hit. And therefore, I think we've got a floor here around 26,000, 25,000, and we're moving up or holding these levels.
So can you remind us what's going on with Sam Bankman-Fried? Is it also about the assets that are seized from FTX? Like, can the result of this trial be that lots of crypto assets get dumped on the market?
Perhaps. I think it's equally as important, though, that all of that bad headline news gets taken out of the market, and that because we've already had major price sell-offs, right? So I mean, altcoins are down 95% on average. Bitcoin went down about 82, 83. So I think rather than coins getting dumped, it's more likely that once that's resolved and out of the news, and maybe when the Binance lawsuit gets resolved, and then there'll be more of a sort of a clean future ahead for whatever altcoins survive, and then Bitcoin as well.
So you think that the impact of this trial is rather the headlines?
It's headline news, it's overhang, and it's not resolved, right? I mean, It's just going to be bad news. They're going to revise, okay, what did he do and how bad it was. There's going to be trauma and PTSD, and there will be a lot of political playing up of how bad it was for investors. And then we still don't know what the SEC is going to do. So we talked about this last year, right? We talked about the overhang being SEC's saying that these are securities, that most of what's traded on Binance and Coinbase are securities, and they seem to be holding that line. It looks like Ethereum's in the clear, Bitcoin's in the clear, but the other ones are still in this category of being somewhat, they need to be regulated, but there's no regulations yet. So this is all what you'd call overhang to the market, in my opinion. Once that clears up next year, 2024, 2025, I think we see the next bull run.
All right, so how about me? So I've made the major calls that I'm making in my FaceTime videos. So please check them out if you want to hear them. They are fairly efficient, they're short, they are on point always. I will continue making the FaceTime videos, and I have made some pretty huge calls there over the past months. So check them out. So today I'm going to talk about rather a short term, because that's what I didn't talk about in the FaceTime videos. So let's have a look at my favorite indicator that I always bring up. So this is the overall leveraging. This is the open interest / market cap ratio. It's an excellent stuff, this one, and it's this is not a financial advice, but I have a very good experience with monitoring and following this indicator. It actually shows you how much leverage is on the market comparing to the market cap. If that ratio is too high, then there is gonna be some dramatic movement on the market, and it's going to be almost always the crash, because there is almost always the leverage that is on the market almost always is long. Because we've only rather seen the bull of crypto over the past 10 years. It was just one huge giant bubble, from nothing, from zero to $1 trillion. So we've only seen upside so far, right? Like really, like those few years that we had a little bit of the comeback, that was just you can't really call this on a macro scale like a real bear. So that's why there's almost always the majority of the leverage is long. Very exceptionally, there is a lot of short leverage, but that's not the case today. Right. And so we've had quite a lot of long leverage, for instance, at the in the mid of August. As you can see, this indicator went to 1.87, 1.88.
Yeah.
And so what happened was the flush of the long leverage. And as you can see, also the indicator went very steeply down, and that's actually very bullish. Short term, I'm just talking about the short term. I'm talking about, well, you name it, like 1, 2, 3 months. However, another indicator, great indicator, that's a sentiment indicator that I like to watch, is that I look at the calls of some other big analysts, like 750,000 subscribers, and like everybody thinks that they're really good. And I just reverse whatever they say, and it shows it works exceptionally well. You have no idea. It's very hard to do because you go against the crowd again, because essentially what they say is what the crowd thinks. So because they're the influencers, they're the opinion makers, and there were extensively too many 40K people here. Like there was a 40K plus 40K, 40K next, 40K next, 40K next. That was the end of.
That's what people were saying. Yeah.
I also made a FaceTime video here, by the way, guys. I made a FaceTime video like here, in this spot, and you should check it out. I'm not going to tell you what the FaceTime video says. Just check it out on my channel. And that's also why I think that what I can tell you that I do think this was the yearly high for Bitcoin. So. I would say that based on the overall leveraging indicator, and based on the amount of the leverage comparing to the market cap, is not that scary today. It's not that scary. It's 1.56 today. It's not that scary. Also, people are not shorting, so that's not good. People are not shorting. You can see there are no really red funding fees. This is aggregated funding rate here. People were shorting in March, really shorting in the 12th of March when we were at 20K. That was a really shorting. Look what happened. People were really shorting There were unbelievable amount of shorts. In November, I remember our podcast with Isabel and Curtis, and everybody was bearish back then. Everybody was saying 10K, 12K maybe. And actually, I disagreed because of this, because of the extensive amount of shorting. It's not happening today. People are not really shorting today. So there is like a mixture. There's always a mixture, good and bad, bullish, bearish. But based on everything together, I would say that short term things are not really scary. Things are not scarily bearish just today.
Right.
I wouldn't say like really bullish, but the leverage is not there yet. So people are not convinced. People are defensive. People are saying 23 right here. I remember right here, there was also extensive amount of 23Kers, 23K, 23K
Right.
next, 23, 22K next. So again, 23K, I don't think, 22K, I don't think right now it's going to go. I don't think that's the next step. But also this is not, I think this is going to prove to be the yearly high.
Could
That
be.
would
It's
be
only 3 months left. Yeah.
as far as for my calls, there are my FaceTime videos, and I try not to time them. Also, if there is another thing that I've learned in my years of experience with crypto, never try to time your calls. This is the logarithmic regression. I'm sure you are very familiar with this. This is the price of Bitcoin in the history, okay, from the inception when it gained first value, which
Is
was
all crypto or just Bitcoin?
this is all crypto. Yeah, thank you for reminding me. This is all crypto. The log regression is still a really good method how to determine whether we are undervalued and overvalued, and to take some conclusions out of it. And this thing here is the valuation versus this trend line. So the higher this goes, the more overvalued we were in terms of price, actual price, versus the fair value of the total crypto market cap.
Right.
And this thing actually looks pretty bullish.
Right.
It's hovering around 40%. As you can see, this is negative number. It's minus 60. Okay, we were minus 60 here, and minus 60 means that we are 40% versus the trend line. So the price, the total currency market cap is 40% out of the fair value. Okay, maybe we can progress. We spent quite some time about Bitcoin and the crypto update. How about the S&P 500? Would you like to go?
Sure. This is what I've been using in some of my videos on YouTube, but it's just a very simple look at the S&P 500. You can see the red line is the 200-week simple moving average, and the green is the 40-week. The reason I include that is you can see November of 2021, we hit an all-time high of 4,800. Okay, that was all-time high for the S&P. We then had our Fed raising rates aggressively, and we had a 10-month fall. So it fell down to 3,500. That was about a 26% fall in the S&P. Notice that it touched on the 200-week moving average there and bounced off that. And if you look back, except for COVID, the COVID drop, we did not drop below the 200-week moving average until back to 2011 or 2011.
Yeah.
So we've been above it for 12 years. We're well above it again. We bounced. Talk about sentiment. In October of 2022, about 80% of analysts were bearish. Everyone was saying that a massive recession is coming and that we're going down to 3,000. They were all wrong. 80% of the market was wrong. The market has rallied since then. We got up to 4,600 a couple weeks ago, and we're at 4,300. You can see we're solidly in a bull trend. So going back to why everyone was wrong. So the bearishness was such a given. I mean, this relates to what you're saying about being a contrarian versus the crypto influencers, right?
Yeah.
And it's kind of obvious if you think about it. If 80% of the market's bearish, it means that all of their clients, all the fund managers, everyone has sold, right? And if everyone's sold, that's what defines the end of a bear market or a bear trend.
They are the influencers. They're making the opinions.
Yeah, and anyone who was nervous and believed that the recession was going to kill us, narrative had already sold. So everyone had sold as of October 2022, and then the market went the other way, right? That doesn't mean we can't have a recession next year, but you can see we've had a solid trend upwards. And so the question is, how do we end the end of 2023? I'm quite
Mhm.
bullish on it. I think there's still, it's very bifurcated now. I think if you go on financial Twitter, in other words, you're either in the bear camp or the bull camp. There's no one in the middle there, I feel. And
Mhm.
so, and it's because things are quite extreme. Like you do have extremely high mortgage rates, you have a lot of leverage. So it's understandable that there's a lot of nervous people. But my confidence is that there's still so many bears in the market that I think we're going to go higher. I did a video saying 5,000 by the end of the year. It's not a solid prediction, but it's just I think there's a good chance we rally. Fourth quarter is usually good for stocks seasonally, especially November, December. Usually you get a rally, and we've held quite well at these higher levels. So now, does that pull up Bitcoin and crypto? It might be a reason to bring it up a little bit. Like you said, probably not much higher than around 35,000, but stocks rallying would be a good thing for crypto in the short term. So this is headline inflation for the last 12 months. It's even steeper if you include 13 months back. So it's been
Wow.
it's been a while, but we went from 9% to 3%. There's been a little bit of strength lately to 3.2, 3.7. But if you average this out over like a 3-month windows, it's a cliff. It's falling fast. Yesterday we had the core inflation. So we've got headline inflation, which is all goods. Core inflation takes out oil and food. Core inflation is down to 3.9, which is the first time in 24 months it's been below 4%. I think this is the same chart actually as the other one.
Okay then. All right.
But the PCE takes out oil because we've had an oil price go back up, but the Fed doesn't. They look at the core because oil can fluctuate very quickly.
Mhm.
So they prefer that. So basically, long story short, inflation's come down. This is the historical. I can't see the far. Oh, there we go. So this is the historical employment rate. We're at about 3.8% as of August. You can see we had the COVID spike in 2020,
Wow.
but look
We're
how
back to the
fast it bounced
levels, to
back.
pre-COVID levels. We're back to pre-COVID levels.
Well,
Wow.
not only pre-COVID levels, but pre-history level. Look at we're
Okay.
lower than we were all through the 80s. We're as low as we were in the 2006.
Mm-hmm.
You know, so that's another thing. The Bears they haven't. I've been just looking at these stats. I've seen inflation going down and jobs holding low. And that's the Fed mandate. It's jobs and inflation. So both are kind of coming into line quite well, which suggests they're probably not raising rates in the near future. There might be a quarter point in November, but we're basically topping at around 5.5%. What else? Housing. So the big one I was thinking was, well, that a lot of bears were thinking, and I was watching, is house prices. This is housing prices historically, okay? Um, yes. But more recently, you can see we did have a decline in 2022, but we've bounced back, right? In the last 6 months, prices have started to rise again. And again, I think something like 80% of real estate analysts said for sure, we're going to have a housing crash when mortgage rates get up to 7% because the payments are gonna balloon. I was thinking if housing started to crash, you would have a negative wealth effect. People would feel poor. It could cause consumer spending to get lower, corporate profits fall, people start getting fired. It just hasn't happened. It hasn't happened. The prices are holding. Even though sales volume has gone down, people are not selling their houses, prices are actually going up because there's not enough supply on the market. And there's a reason for that. Basically, most mortgages are fixed mortgages in the US, so they don't care about what the current new mortgage rate is because they've locked in very low rates, 2-3% from years before. And also about half, let's say 40% of US houses have zero mortgage. They're owned by baby boomers that paid off their houses a long time ago. Putting this all together, we've got inflation falling, job market is good, housing prices have not crashed, corporate profits have been fairly good, and that's why, the stock market has rallied. We have not had a recession. This is the US
Okay.
10-year treasury. You see
Mm-hmm.
it's risen quite a bit recently. It's higher
Okay.
than people thought. And this is scary because the bond market, as we know, bond prices move inverse to the rate. So
Mm-hmm.
bond prices are falling as the rate, or existing bonds that people own already start to fall in value as the yield on new bond issuance rises, because those are more attractive. The newly issued bonds are paying more money than the old ones did, right? So therefore, bond funds are getting hurt. And that's why some of these banks went bankrupt in March. If you remember, there was Silicon Valley Bank and a few others. They basically
Yeah.
had long duration bonds in their portfolios. And as the value of those started to crash
Mm-hmm.
because rates rose. So they were caught out in some bad trades and they went bankrupt. So there is some concerns that this could happen to more banks, that their bond holdings lose so much value. The recession still hasn't come. Everyone says there's a lag. The bears will tell you, look, it takes time for these higher interest rates to impact the economy,
Mm-hmm.
and we're going to get a recession in the middle of 2024. But
Mm-hmm.
they were saying this about a year and a half ago. So it's a very, very, very delayed recession.
So your main point is that S&P 500 is due to make a new all-time high. Is
Yeah.
that right? Okay.
Well, we already hit 4,600, which was only like 5% off. We hit that
That's
3 years ago.
that was
So
pretty
yeah.
it's higher than I
So
expected for sure.
yeah. So it's a retest of the high at 46, and then it's 4,800. People think the S&P is overvalued, right? But we call it the Magnificent Seven. Have you heard this term, David? Magnificent Seven. It's basically
Okay.
Facebook, Amazon, Netflix. I don't know if Netflix is in there. Google, Tesla, Nvidia. The top 7 stocks, Microsoft, have rallied like almost 100% each this year, and they've dragged up the S&P PE because of that group of 7. But the other stocks are up like 2%, I think, or 1.5%. So it's been a very narrow rally in the S&P. The idea is this would broaden, and those other 493 stocks out of the 500 will catch up.
We could as well just touch a little bit, perhaps, the gold and the US dollar index, DXY, starting with gold. So would you like to comment on that?
Yeah, so it looks like we tested 3 times now. We've tested that $2,000 mark 3 times. And then we've fallen off again to 1850, looks like. Is that right? Sounds low. Gold's about 1900 right
1850.
now. The gold bulls are tortured forever. So I think the thing is a little bit with, I'm learning this about gold, is that as the price rises, it gets sold off. The miners sell gold. That's their job, right? So they sell their stocks as the price rises. So there's a lot of sell pressure. And there are untapped gold mines that will come online. Like if the price goes to $2,500 or $3,000, there's the capacity to increase the supply of gold, which will put downward pressure, right? So I'm not saying gold isn't going higher, but if you compare it to something like Bitcoin, which the Bitcoiners always talk about fixed supply, it is true that you have, with most commodities, as the price rises, the supply opens up. They develop more oil rigs, more gold mines, more copper mines. So it puts sell pressure as the price rises, which keeps the price down, right? I don't know if that's what's happening with gold, but it seems like there's a lot of people that want to sell it at $2,000, at least for the last 12 years. It looks like that's been the top. So, and I follow the Japanese yen because I live in Japan, but the yen is super weak. It's even getting weaker.
Oh my
And
gosh.
it might have lost its status as what we call a flight to safety currency, right? And of course, the reason for that is that Japan is not raising interest rates, but the US is, right? So the US is paying more for US treasuries. And so the bid is to buy US dollars and sell Japanese yen, right? Because you're getting 5% on your US dollars and you're getting 0% on your yen. So
I see.
that's partly why we're seeing the DXY rise as well recently. You can jump to that if you want.
That's what brings us to the last topic that we wanted to cover.
Yeah.
That's the DXY.
So the DXY has surprised to the upside the last few, what is that, weeks, right? It's been like 12 weeks green. Look at that. Look at that green.
Yes.
1, 2, 3, 4, 5.
Since July.
13 weeks of green candles. Now, why? It looks like, so the US is the only one raising rates. Canada's raised a little bit, Europe's raised a little bit, but the US dollar is getting a bid as the US rates go higher, or there's a perception they will stay higher. So that's not good generally for crypto, higher, and it's not good for risk on assets to have a strong US dollar. So hopefully that goes negative a little bit.
So I would like to comment on this just a little bit. These two lines I've had here for a long time, and they worked to my surprise really well, because also the first one, it was broken, and then it acted as support. That's like immense, like very bullish. And then I think I even on the podcast I said that okay, we are gonna go to the second line, and then we went to the second line, and then we even went above a little bit on the wicks on the weekly candles. And I was always like, when I was watching this chart, I remember the last year in September, I was like, this can't be above my line. Like the close cannot be on my line. The close cannot be on my line. And to my surprise, it actually really wasn't. It was below my line. All the closes were below my line. And then it went down. And it even broke the first line. And then again, it resisted it from the below. So it became a resistance. So these two lines actually I'm very proud of. And now we are testing again this one. So based on these lines, based on pure technical analysis, you said that hopefully there is going to be a little bearishness, and I'm giving you good news that I think there should be, because this is the moving average, 20-week and the 50-week, and they're going to merge, they're going to intersect soon, and I think the intersection could be retested. So there is going to be some bearishness in the very short term.
Right.
And what do you think about the BRICS at the very end?
Oh, the BRICS. Yeah, I haven't looked into the modern, sort of the most recent negotiations on it. I again, if you say the US dollar, you've heard me say this before, if someone says the US dollar is going to weaken, I would say against what? And that would be the only thing. So
that would be the BRICS.
Right. So if the BRICS, so the Chinese economy, it's hard to get, useful data on, because a lot of the Chinese government hides their information, their data. But there's a lot of people that believe that China's a big bubble and it's going to crash and will have to devalue their currency. So I guess with BRICS, you would say, can they create a stable currency with all of them together? Because each of those countries there are not really trustworthy. But your point about
the biggest
GDP,
argument against that,
your point about GDP, I wasn't thinking of that. I was thinking, well, Egypt has 40 million people, but their GDP is not high. But you're right. I mean, China's GDP is obviously very high.
India is there as well.
That's important.
India is it's bigger economy than France today.
Yeah. The question would be, are their currencies stable? Because it would be, I guess, China and India would be the biggest part of the basket. And
then Brazil, Russia, South Africa, Egypt.
So one issue is, can you just trust what's in the basket? Can I have confidence? And then the reason the US dollar has been strong historically is people trust the US government.
That's the argument I've heard.
Yeah. And so that would be probably the over under on whether you believe in BRICS would be what is more trustworthy. But also if they are that strong economically, they could force this on other countries. There could be some sort of political push of the currency, but it is a free market. So does the average trader choose the US dollar or a new currency? I'm not sure.
So it's time to wrap this up. Thank you, Curtis, for coming, and thank you for sharing with us all your research. So once again, Curtis has his own channel and his own, of course, he's more active on Twitter, but he is as well making some YouTube videos, so check him out. Thank you again, Curtis, for coming.
Thanks a lot, David. See you later.